Another trade recap. Took one long on NQ. Beautiful market maker model. Market maker buy model here. As you can see, literally it's happening every single day. Just insanely good price action this week and last week. But yeah, let's get into that. So going into this day, I was I was honestly completely hands off. Like there was nothing that I saw that I liked. So let's just go to pre-market right quick. So at market open, this is kind of what the market's looking like. I recognize we've got like an SMT at these lows. So if you drag over ES, as you can see, ES has swept out this low here. So bullish SMT on the bigger time frame. The market's kind of starting to displace higher. And we did have these 1 hour inverse imbalances right here. They're not like very clean and obvious, but we do have inverse fair value gaps here. Displacement higher. So I was leaning maybe a little bit more bullish, but like I said, at market open, this is literally where we were. So there's definitely no opportunity for me at market open. I needed to see more information. I needed to see some form of manipulation before I can potentially decide what I think the draw on liquidity might be. So I'm waiting. I'm being patient at market open. What is this? 828. So let's just go forward a little bit. I'm being patient. Now market opens here and we end up selling straight off. Now, already right here, within 2 minutes, I'm already leaning more bullish. Why do I say I'm leaning more bullish? Because what do? Market opens, we don't go up and take any of these highs. Instead, we immediately start to sell off. And initially, what I was looking at is potentially holding CE of the 15-minute rejection block. So notice this 15-minute candle here from 7:30. I think we had like PPI, I believe, a little bit of data here. But what this candle ends up doing is selling off into this 15-minute bullish imbalance, sweeping out this intermediate low, and then leaving this huge wick at the bottom, like a 113-point wick. And initially, NQ was trying to hold consequent encroachment of this wick for a little bit. So I was like, okay, maybe this wants to hold, and we could look to see like some sort of move higher from here. Now that doesn't necessarily end up happening because I was if this was going to play out, I would needed to see like an inverse like right off the rip, and we didn't even end up opening in 1 minute. So at this point in time, NQ continues to sell, and ES is selling as well. I'm like, okay, if we're going to be bearish, if we're going to be bullish here, I want to see one of the assets take out this low, preferably ES, because that would make NQ the more bullish asset, right? Like with an SMT, if ES sweeps this low and NQ doesn't, what does that mean? It means that NQ is more bullish than ES. And if you're looking to trade NQ, you're looking to long NQ, then that is what you want. You want the asset that you're longing to be more bullish than the correlating asset. So I was looking to see hopefully ES take this low and NQ not. And as you can see, that's what ends up happening. However, we do get right quick. We get like a huge move up somewhere around here. Right here. So I'm sure so many people got faked out right here. Now, why should you not take this long? Because ES never takes the low, right? So notice where the cursors line up. This is where we get that big move higher on NQ. I'm sure I know there's like a 30-second inverse right here. I'm pretty sure there was. Let me go see right quick. Yeah, it was this inverse right here. So this 30-second imbalance gets ran through. Big move higher. I'm sure there were a lot of people that got faked out on longs right here. Now, why should you not be taking this trade? Because there's no manipulation whatsoever. ES is generating sell side liquidity. NQ hasn't taken the low. There's no reason for this move to play out. Now, even if it would have played out, does that make it a good trade? No. Like you always need to wait for manipulation. Just like the same exact thing in yesterday's trade recap. If you go watch that at market open, I was not interested in any sort of longs until we got the internal turtle soup, the internal manipulation. We ended up getting that, and then I took that really clean trade. So yeah, hang on, let me wreck quick. Uh, 1 second. So yeah, I just pulled this up. So this was yesterday's trade. Notice at market open, what happens? See this little move here? We get a huge move higher. I'm sure everyone knew this was a draw on liquidity. It was very obvious. I'm sure there were a lot of people that took longs inside of this fair value gap here. Now, why is this a bad trade? Because there's no manipulation. So yesterday I was not interested in touching longs until we took out this low. We swept the internal low and had turtle soup. So as you can see, the market ends up sweeping this. Then we get that move lower, sweep out this intermediate low here, and then displacement higher, and that's where I ended up taking my long yesterday. And as you can see, this is a beautiful market maker buy model, and you have to always wait for manipulation. So yeah, I just figured I'd pull it up right quick. But anyways, ES ends up sweeping out the low after this big move up, and Q gets like a big dump lower here. I'm sure there are also a lot of people that took shorts on this 1 minute inverse for value gap. Now, why should you not short this? Because there's no manipulation at the highest. Same exact reason you shouldn't take the long, right? So we get a move higher. You should not long this because there's no manipulation. And then what do? We just trade higher. We generate all of this internal low resistance buy side liquidity leading up to the 5-minute intermediate high. No manipulation to the upside whatsoever. So this inverse for value gaps means absolutely nothing to me. This doesn't make me second guess my bullish bias. I'm just looking at this and I'm saying, okay, maybe NQ wants to go take the low, but either way, I'm still bullish and I want to see it move higher. So I'm waiting here. Don't give a crap about the inverse. So we end up getting a little bit of move lower. SMT stays intact. Now I did actually I took 2 trades today technically. The first one was perfectly fine. It's exactly what I wanted to see, but I don't even know. I guess I was just like, I thought it was going to lose basically. Like I saw the market start to sell off after I took that long, and I was like, okay, this is probably going to get stopped out. Maybe I, jumped the gun and entered a little bit too early, so I ended up closing this trade for like, it was like a $400 loss on each account, on all 3 accounts. So that was kind of stupid. I shouldn't have closed that. But let me just bring up the executions right quick and show what I'm talking about. So I ended up taking my initial long on this 15-second inverse right here. So as you can see, this 15-second bearish imbalance gets ran through. I take my first long. This is exactly what I was looking for. We had SMT at the lows. I was looking to go break even at this 1 minute for value gap right here. As you can see, this 1 minute for value gap was going to be my break even point, but I see market start to sell off here. And I was like, okay, it looks like NQ is probably going to go take this low. I don't even know. I was just being stupid. I shouldn't have closed this trade, but I ended up closing it. And then, of course, right after I closed, we get a freaking 100-point move higher. And I was like, okay, well, that was stupid. I shouldn't have closed. This is exactly what I wanted to see. This is one of those situations where you just need to trust your model. Like if the setup is there, we have the inverse, we have the SMT, we have the draw on liquidity, we have the internal market maker buy model right here. Like just trust the setup. You have the break even point. Don't be weird like me and just take it off just because it looks like it might go to the low. So yeah, we end up getting huge displacement up, and I'm like, okay, well that was stupid, shouldn't have closed that trade. But what we end up doing is inversing this 1 minute bearish imbalance. So I'll just show you the executions right quick. This is where I took off my second position. This is where I entered, but I just want to take these off to clean up the chart a little bit. So we end up getting that really nice 1 minute inverse for value gap here. And that is when I'm like, okay, this is definitely a buy model. Notice, what is this right here? This is a internal market maker buy model. This is a beautiful internal market maker buy model here. Because what do we have? We have sell side of the curve generating buy side liquidity, selling off into a key level. What is the key level? This low. So SMT gets put in, ES takes the low. Then what do we get? We get displacement back inside the range, pull back to a fair value gap, and then buy side of the curve completing this. But what else? What is this? This is a market maker buy model inside of a market maker buy model right here, right? Because this is the model I just showed you, but we are inside of this model. So what do I always say? Models inside of models inside of models. The market is completely fractal. You'll see this on every time frame, and the way that you're able to take such clean, efficient trades is by overlapping these models. But yeah, just a little side note there. So I end up taking my long right here. So this 1 minute inverse for IGAP gets put in. I'm like, okay, this looks great, but I don't necessarily just want to click buy right here because I kind of have to have my stop all the way down here, and that is a 80-point stop. So I was like, hopefully we can get a rebalance. We end up getting this really nice rebalance here. So I take my long on this 30-second candle here. My fit was like about where I got marked. Stop is at the low, and I'm looking to go break even at this intermediate high, and I'm targeting London high here for my final TP. And as you can see, the trade plays out absolutely beautifully. I mean, crazy trade today. Like, it was so clean, dude. Like, as soon as this first candle printed out, because, like, notice, for a second, I was thinking about taking my position off at this internal high until what happens? Until I see this candle close. I'm like, okay, if this is the first candle that we get from the reaction of this inverse, do I really think that this candle is going to close right here? We're going to sweep this high and then sell off? Like, no, it's extremely obvious to me when we get, like, what do you always need to pay attention to in the market? Displacement. Like, it's so important that you're always paying attention to displacement in the market. When we get a huge move up, another 82-point candle, you can't necessarily expect the market to just sweep an internal high and then dump all the way back down. It's obvious that there's momentum here. It's obvious that we want buy side liquidity. That we want the next form of buy side, which is what it becomes this high. So I don't take my position off at this intermediate high. I leave the runner. I leave this position all the way to London high. And I already showed you the executions on that. But yeah, absolutely beautiful trade today. Once again, a market maker buy model right here. This is a market maker buy model inside of the market maker buy model. And yeah, I took that initial entry that I ended up closing for no logical reason. Stupid, should have kept it in. But yeah, I mean, beautiful price action. Great way to start these new funded accounts. I passed these yesterday, and then this was the first trade on them. So yeah, great way to start those new XFAs. Sorry, I'm like so tired right now. I can't even think once again. Hardly slept last night, but yeah. Uh, beautiful trade today, and I'll see y'all in the next recap.